Daily Energy Markets live video podcast on Thursday, the 23rd of March, the first day of the holy month of Ramadan here in the Middle East, where I am, and indeed around the world, of course. So I'd like to wish all my Muslim friends the blessings of the month and Ramadan Kareem. In business, it's the morning after the night before, I guess, as markets digest the latest interest rate move by the Federal Reserve. 25 basis points increase that was highly flagged and forecast by most financial experts. But markets didn't especially like it, it seems. The S&P dropped 1.4% towards the end of the trading day yesterday. Asian equity markets were mixed this morning. Oil was trading down a smidgen, with Brent at around $76 per barrel. What seems to have bothered people were comments made in a press briefing by Jay Powell, the Fed chairman, that he didn't expect to be cutting rates anytime this year and that tackling inflation remained his number one priority, even against the backdrop of a banking crisis that some have suggested is like the early days of the 2008 global financial crisis all over again. So the question this morning, I guess the opening question is, has he got it right? To talk through these and other issues, please welcome back Albert Stromquist, principal at Landstrom Advisors, an alternative energy consultancy, who is in Hainan in China. Also returning, an old friend of the show, Ahmed Mehdi, research associate at the Oxford Institute for Energy Studies in the UK. And for the first time on the show, Ram Narayanan, Director of Strategic Markets and Business Development at Vedanta in Mumbai in India. So let me first of all get a quick instant reaction on the Fed moves from the three of you. Albert, over to you first. Is the banking crisis of 2023 over, and has the Fed chosen the right path to steer in the two-way tug between inflation and recession? What do you think?
Well, good morning, and thank you very much, and Ramadan Kareem to the members of the panel and to the audience from Gulf Intelligence for this webinar broadcast. The 25 basis point Fed increase was already priced into the market, as you said, Frank. It was anticipated, and further rate increases, I think, are equally anticipated later this year. But there is, a concern in the marketplace that the Fed may overcompensate and act to the detriment of the U.S. economy, and more broadly, the global economy. The banking crisis has yet to play out. I mean, it's been fairly limited in the U.S., surprisingly a bit more severe in Switzerland with Credit Suisse and UBS transaction, and some damage in the UK as well. But it was started in the US by, I think, very sloppy management practices within Silicon Valley Bank. And these practices were kind of enabled by a rollback of banking regulations in 2018 that had been introduced under the Dodd-Frank Act in 2008 in response to the global real estate crisis. Curiously, it was actually Barney Frank who was one of the proponents of rolling back the very regulations that he imposed. So it could actually be a limited event in the U.S. banking industry, ascribed to the poor management practice of the leadership of one or two banks, and it's behind us, I think, but it's too early to say. Okay,
but it seems as though the Fed certainly thinks that it's not comparable to 2008 by taking the action that they did yesterday and by signaling that there may be further interest rates to come. So let me go to Ahmed Mehdi. Ahmed, what's your outlook for future Fed moves? Some commentators were predicting before the meeting that the Fed might call time now on monetary tightening. That hope seems to have been dashed by this press statement last night, this statement at a press conference. What do you think?
Yeah, thanks, Frank, and Ramadan Kareem to everyone listening as well. I agree with the Albert's comments, that there was a 25 basis point hike was baked into the price action I think certainly that anything higher would have been would perhaps cause a little bit of stress and concern around signaling. I think fundamentally, this for certainly for looking at where the terminal rate will be for the year ahead has also been revised. So basically, certainly in the amongst interest rate traders, there's been changes in expectations around what Fed policy would be. Quite frankly, it was basically a situation of damned if they do and damned if they don't. So really, caught between this kind of tug at the time. However, in saying all of that, I think that generally speaking, the Fed policy action in any case basically means that certainly for oil markets that macro sentiment is going to be an important factor, and something that hasn't yet been priced in, however, is given that this is very much still yet to play out, what the actual risks within the banking system may be.
You think that there are still risks out there, are there?
There are, yes, and perhaps that's something that could actually lead to revisions on oil demand. I think just in terms of the oil market as well, something that was, in terms of the price action, which was very much a risk-off move. What was kind of shrugged off by the market was the fact that actually there has been stock builds for the last few months, and actually some of the bearish fundamentals. People are saying, well, actually, there's what's going on in the physical market and financial market is very different, but in reality, it's very much strong data coming from the east and weak data coming from the west, and in reality, we've still been seeing stock builds for the last few months. So dollar, what happens to the dollar is obviously influential for what happens to the oil price, but also I think that market participants are going to be paying closer attention now to this the path forward for this contagion risk, if you like.
Okay, all right, but there is still a contagion risk. Okay, well that's interesting. Let's go over to Ram Narayanan over there in Mumbai. What's the feeling, Ram, among the Indian financial community? India had its own shock recently, didn't it, with the Adani affair, and that situation won't be improved by rising interest rates. I'm not asking you to comment directly on Adani, but what's the feeling? Are there any further cracks that might appear or widen in the financial structure there?
Well, first of all, happy Ramadan Kareem to all my friends. Now, coming to your question, Frank, is yes, there was a bit of shock in the market with the incident that happened about a month back. But the basic underlying factor is the Indian economy is resilient right now. We had a budget recently, which was a fairly good budget, and still we expect 5.5% to 6% growth. There will be some after effects of what's happening in the financial markets, but the statement that's come out from the authorities is Indian banks are strong. The Indian corporates, because of the Indian demand, are placed reasonably well. There is certainly going to be an effect on the international business of some of the companies because of the weak global signals that we're getting right now. So on top of this, what we also seeing is the oil prices, have come down recently, but the Indian government have sort of taken it in the stride that the oil markets will be volatile and it will move in the range which we saw before, around 80, 85. Right. So all this has been
well below that now, which must be good news for you.
It is good news for the government because still the prices in India have not been changed. The pump prices have not been changed. The government is obviously getting as a part of the tax kitty. So net to answer the question, all the financial markets did react to what has happened in the Western world. But to a large extent, they've come up again. So because of the resilient Indian economy and the demand that we see from India, so therefore the sort of fears, a little bit of fears are there, but not as much as we can see there's a big contagion effect, which can affect the entire market.
Right. Let's talk in more detail about oil. Ahmed, you you began speaking about the fundamentals there. Let's dig deep into that a little bit. We heard on yesterday's show that fundamentals remain strong and that with a fair tailwind, the $100 a barrel forecast that some people were suggesting earlier are realizable again in the not too distant future. What's your view now? Will the Fed move have a big effect on the oil outlook?
Well, apologies, Frank. I didn't listen to the show yesterday, so I'm not sure what
the
near future is. But
Robin Mills was telling us that there was a genuinely sort of benign outlook for oil market fundamentals.
I think really, as I said in the beginning, that at the moment, a lot of the optimism is based on basically a large chunk of that demand growth this year is China related, obviously. At the moment, with maintenance happening, purchasing, certainly in Asia has been, holding up. Certainly, there's been, strong demand in the spot market. Naturally, in Europe, obviously, with what's been happening within France has impacted some European throughput activity. But as I said, so far, I think that it's a tale of two halves in a way. With regards to, as I mentioned, the first of all, you've got effectively stock builds happening in the Atlantic Basin. Differentials have weakened. There was an article in your daily about Brent Dubai spreads, which have narrowed because of what's been happening. Where you've got still pretty firm demand in the east and weaker demand and basically weaker buying sentiment in the Atlantic Basin. I think also there's perhaps now the IEA in their last report. That's the third time now that they've revised higher their view of Russian supply. So you've still got this question mark around how resilient is Russia and the yet to be determined impact of the product reshuffling and whether that will be more difficult than it is for crude. Whether we getting to 100, in my view, some people have even suggested getting to 130. So some really real sort of expectations pinned on both China and jet fuel recovery this year, which are the two key ingredients. I don't buy that view, in my opinion. I think we're still going to be in this very sticky range of 75 to 85 for a while now, and not notwithstanding what we've just been talking about for the last 10 minutes, which is still very sensitive to the macro outlook this year.
Just let me stay with you for a moment to ask you about OPEC Plus policy and OPEC Plus structure. You mentioned there the IEA has again increased its forecast for Russian output. But, that seems to go against the sense that we've heard about the strength of Western sanctions, doesn't it? Explain that to me.
There has been an impact on Russian output, but not as much as perhaps people had think. When you say the effect of Western sanctions, also people have, the reality is, I think it's been mentioned many times, is that there's also an extreme opacity around how Russian crude is traded and priced right now in the market. And as despite the efforts of price reporting agencies to develop new price assessments around delivered Russian cargoes or what the real value of Russian crude is in the market, the reality is that that transparency is pretty much dead, and so you've got this sort of very strange situation where you have a situation which is quite unique in the market where China is effectively, one of the biggest swing buyers of gray market barrels. Not only Russian, Iranian, Venezuelan, and that is also a key determinant of price, of price action as well in terms of Chinese buying activity. But on Russia specifically, I think that the This will now, this announced 500 KBD cut for March. Also we have to take into account there's maintenance going on, quite a heavy maintenance season going on. So what people may think is a drop in output is perhaps more related to a very heavy maintenance season when effectively Russian refineries were running very hard before the product ban to basically try and supply into the market. But I think also with products, the big question in my mind is, you've seen a lot of kind of emergence of regions like the Middle East, Turkey acting as product hubs, where you basically get reformulated cargoes back into the market. So what refining runs in Russia so far are actually pretty, haven't been affected as much, but naturally, I think you still have to wait a few more months to see the true impact of the pressures. But my final point, sorry about this, is that one thing that I have seen a lot of is Russian crude heading into floating storage. And so you are starting to see supply chain pressures build up. But when, what that actually amounts to in terms of material physical barrels cut is still a dynamic in the market to be determined.
Okay. Albert, let me go to you. You're there in China. Will China buy this floating surplus? I presume China will keep on wanting cheap Russian oil, won't it? What's the outlook there?
If we go back to the beginning of the year, there was a general consensus, then I recall, that Chinese storage, strategic and operational storage, was full. Giving China, if that's true, that gives China the benefit of modulating imports versus draws from stock. Now, in the first 2 months of this year, imports were down by almost 1 million barrels a day compared to November, December deliveries. And perhaps that's a softened demand. Perhaps that is actually modulation of supply, stocks versus spot cargoes. The robust forecasts for China for 2023, I think, are a bit premature. Right? They're based on a number of segments of the economy recovering here rapidly. One of which is consumer spending. Let me just say briefly on consumer spending, the consumers turned to savings during the pandemic. And now their savings are full and they seem reluctant to begin to loosen their pocketbooks and get back into the market. Also, on the question of consumers, I can go through the math here, but it works out. There are only about 160 million true consumers here in China out of the total population. You have to take 600 million off the table right now who are living on $5 a day, right? And then the balance, you put your Pareto principle on that and say there's 650 million consumers in China. So these are the people that you're looking to lead the consumer recovery. On aviation, international travel, reestablishing China's international aviation industry, only on March 15th, after the 2 sessions, did China actually invite applications for tourist visas.
Yeah.
So those applications are currently being processed, but as of now, international aviation is very deeply depressed here in China. It continues at pandemic level. Right?
Domestic has recovered to some degree, hasn't it?
Domestic's doing okay, right? But it had a burst during the Spring Festival, Chinese New Year, which is very predictable, right? Yeah. So anyone looking at economic results and consumer spending in January and February and saying, you see, there's a robust recovery, needs to go back and compare those same results to pre-pandemic economic activity in January and February of preceding years up to 2019, right? So it's not all that robust. And I think finally, if you start, the banking sector remains weak here and susceptible, as well as the property sector. The 2 sessions put in place new policies, which haven't been enacted yet in any kind of meaningful way to produce results to support both the banking sector and the property sector with new policies and infusion of new capital.
Okay.
Where does the capital come from? China freely uses the printing press to inflate its M2 money supply annually. Right?
Okay, of course. Yeah.
And so a lot of their capital investment comes from new currency, new capital as a result of inflating their money supply.
Okay. Let me go to India, the other big customer of Russia these days. Ram, the Indian summer is approaching. How is the demand for power looking in that period, and how will it be satisfied? As we've said, there's lots of Russian oil out there. What else is in the energy mix for India?
Yeah, that's a great question. So now summer is approaching. In fact, summer is already approached in India. So now, as everybody knows, that the peak demand for power in India comes in summer. And if you look at the energy mix of India, like about 70% comes from coal and gas, and rest comes from hydro, nuclear, and renewables. So last year we had a major power shortage. So what the government of India did was they sort of gave a diktat to all the power plants. The coal-based power plants run at full throughput. A similar kind of thing has happened right now, where the government well in advance have told all the power plants to increase and maximize the power loading factor. And to satisfy the fuel demand, so therefore the government has also advised all these power companies to import coal if required as much as they can.
Import
so
coal.
net what has happened is coal. Yeah, because still, as I told you, like 60% of the power mix in India is coal, and 12-13% is gas. Now gas has got its own set of limitations, but still, and so it's coal that's still going to drive the demand right now. So therefore, as I told you, the government has authorized or given a sort of a direction to all the power companies to import coal and not be short on fuel and maximize the power throughput as much as they can. So therefore, that is what is happening in India right now. So the other option is, of course, people are talking about gas, even though gas prices have come up in a big way in the last 2 or 3 months. But then gas, you need quite a lot of infrastructure to handle the imports. So that work is also on. And third thing is renewable energy. Renewable energy over the long term, yes, the government wants to increase the renewable energy mix to more than 30% or so, the focus on solar power. But that will happen in the next 2 to 3 years. But right on the short term, it's going to be for energy security as well as the power demand. It's going to be coal-based power plants in India in the next 3 to 4 months. That's what the focus is on.
Thanks.
And I think if I can add, Frank, you spoke about Russian oil. If we can just make a mention, Russian oil, as everybody knows, Russia has become number one oil supplier in India. All the refineries, including my previous company, have lapped up Russian oil in a big way. So that's expected to continue as long as the price arbitrage with the international market is going to be there.
Okay. That's a nice segue for me. Thank you very much. Because the other big event of the week, of course, was the visit of President Xi of China to Moscow. It all looked very predictable from my reading of it. Support for Putin dressed up in cosmetic calls for peace. Ahmed, is that how you see it?
Sorry, I had my on mute there. For sure. I think that basically addressing the Russia-China balance, and I think it was very much, the expectations beforehand in terms of immediately reinforcing support for Russia. I think that's not how I read it. I think it was more about China basically seeing Russia as a junior player, and actually even the discussions around the gas, the power of Siberia too, even issues around
that didn't happen, did it?
That didn't happen, and also there weren't any sort of explicit assurances around logistical military support. I think it was more about sort of and even the people who actually accompanied President Xi, I think perhaps Putin was slightly underwhelmed with the fact that some of the key people from the PLA, the central bank, what have you. So really, I think this is more about China asserting itself as as part of that sort of Sino-Russia relationship,
senior partner.
Exactly.
Albert, did anything surprise you? You've been watching these things a long time. Did anything from the visit surprise you? Is there any prospect, do you think, of a similar kind of peace initiative like the one that China brokered between Saudi Arabia and Iran? Anything like that coming out of this trip?
Well, I risk of sounding cynical here. I see the peace initiative as a publicity move. Look, the trip had some fairly clear practical or tactical elements to it for President Xi's visit. And one of which, and probably the foremost of which, was to send a powerful signal to the US. The US was the audience for this visit, right? To send a signal to the US that China, with Russia now, as I agree with, as the junior partner, represented a core of a potentially new world order that they were pursuing side by side. And that resulted in an attack on democracies around the world, particularly an attack on perceived weakness of the U.S. government and an imminent failure of the U.S. governance model. That was all kind of laid out in this joint meeting. With respect to the Ukraine, it's certainly in China's interest that conflict not be resolved anytime soon. Right?
Yeah.
Because it distracts the US and NATO from whatever other plans that China may have in its own market, in its own backyard.
Right. Yeah. Okay. Good point there. Ram, tell me, what does India think when it sees its great global rival, China, going around the world like this, asserting itself on the world stage? Is there any pang of jealousy? Why doesn't India play such a role in global diplomacy?
Well, India has been off late. To answer your question, like China has been playing in Africa for quite so many years. And right now, the way we look at it is what we see in the last 2 to 3 days is more like two countries which are trying to get together who are against the Western order. That's the way it's been seen out here.
As Albert said,
of course,
yeah.
Russia is a big... Yeah, like Ahmed said, yeah. And of course, Russia is a big ally of India for so many years. And India is one of the biggest arms market for Russia. But on the whole, like India has been engaging quite a lot with other countries also, including the Middle East powers, Europe, as well as with the US. So that's the way India is sort of diversifying its international affairs strategy. But if you look at what has happened between Xi and Putin in the last 2 days, it was more like, from an economic front also. Look at it this way. My view is China today is it's going to find it increasingly difficult to play in the international economic scenario, especially global trade with so many sanctions coming around it. And Russia already has got so many sanctions coming around it. So It's more like what Albert said, it's more like forming a bloc against other countries so that, from an economic point of view, as well as from optics point of view. So that's the way it's being looked at. But From an Indian perspective, it's like, diversifying its international strategy, which they've been doing over the last 3 to 4 years, and which has been giving decent results, I would say.
Okay. Can we call up the survey question, please? This harks back to the opening matters that we discussed. So to signal a continuing program of interest rate rises, as the Fed has done, against the background of volatility in financial markets and tighter credit supply, is a recipe for recessionary disaster. Agree or disagree, please? We give you there's no gray area on this program. It's either a yes or a no. Agree or disagree. So, Ahmed, you're there in London. I just wanted very quickly to ask you, what's the informed elite thinking about Boris Johnson? Will he be kicked out of Parliament? Is there any has this put the
Frank,
final nail in the
coffin? You know better than I do about him.
I know what I read in the papers. I don't hear the gossip in the pub.
He always manages to escape scrutiny. Is my view. He's a wily fox. But no. On a serious note, I think there's bigger issues going on here.
Absolutely.
And certainly, the Tory party is in a bit of a, as usual, maelstrom.
Yeah, but Rishi seems to be slowly getting things done, doesn't he? He got his Northern Ireland bill through. You know, he made some progress on migrants, which, you know, seems to, you know, be
with the
fairly
inflationary
successful.
pressures here,
Yeah,
and
yeah, of
on
course.
top of
And
that, cost of
there's-
living crisis, the fact that
10.4%
Labour is actually
I
inching
saw
up.
during the week, which is enormous.
Yeah, Labour is seeking to reformulate a plan. I mean, there's a lot of sort of underthink, you know, and you know, colourful personalities like Boris, I think, often are actually ironically useful distractions for you know what you know for
Colourful is the word. Can we get the survey result, please? Can we pull that up? Oh, right, we're almost split down the middle. I don't know what to say about that, really. Maybe the bipolar approach wasn't the right way to do that. Maybe the question should have been more nuanced. But anyway, there we are. We have no clear majority as to whether the Fed actions will prove to be recessionary or not. So, I think that's all we have time for, I'm afraid. There's no podcast, there's no Gulf Intelligence podcast tomorrow. So enjoy a long weekend for those who can take one. And once again, thank you to Ram, Albert and Ahmed for your participation today. And Ramadan Mubarak to all of you. Thank you very much indeed.
Frank.
Thank you.
Thank you very much. Bye.
Thank you.
Thank you.
Bye.
Bye-bye.
Bye.